tax reform. You have the handout, so please refer to that if you need to make a few notes on that. And I roughly divided it in 4 groups. So those 4 groups are talking about, so what changed, what did not change. And then there is a part that is personal and part that relates to business and real estate. We're going to start with things that say what did not change, what survived the reform. Why is that important? Because throughout the process, okay, when did things start? When the tax reform talk started?
During the 2016 election.
Yes, during the election, right? So Trump made certain promises. He said, I'm going to do this, I'm going to do that. Then the real talk started late last year. And the whole thing unraveled in a couple months. So in a couple months, there are so many proposals, so many ideas. Everybody was talking about that online, on TV, everywhere, and we keep hearing, oh, this is happening, that is happening. Up to this day, what is surprising is, and I'm one of the experts nationwide who answer tax questions on places like Bigger Pockets, for example, which is nationwide place for real estate investors. We go there and people today keep asking questions of, yeah, I've heard this happen. No, it did not happen. So let's be very clear about first things that did not happen, that we do not need to be worrying about. So first one here is, we still have the same filing statuses. So whatever you want, we still have married filing jointly, still have head of household, all of that still exists. Despite promises to simplify tax code tremendously, we still have 7 tax brackets. So that thing did not change. The brackets themselves changed, but not the fact that we have so many. Next, talking about core itemized deductions. There was so much noise about this. Oh, no longer we are going to have medical deductions. No longer we are going to have to be able to deduct property taxes or state taxes or this or that. Okay, all of them pretty much stay. The core itemized deductions that were property taxes, mortgage interest, donations, medical deductions, they stay. They may change, they may have changed. The rules have changed, but the deductions themselves stay, most of them. I'm stressing core. Okay, next one. Talking about is, okay, educator credits and student loan. Was much talk as, oh, how that is going to change, be eliminated, thrown away. No, guys, we still have all of that. Next, capital gains rules. That is more close to home to all of us. They did not change. We still have preferential rates, still have pretty much the same rules. Not much change on the capital gain arena. Next one is exclusion for home, for selling of primary home. What happened, what was the rule that existed before was, if you live in your house 2 out of 5 years, you can sell it and pay no taxes. Still the same rule. There was a lot of talk that that rule was going to change. It did not. Still the very same rule. And amazingly, even some CPAs, I've heard recently talking about how it changed. No, they were talking how it was supposed to change and it did not. Next, AMT. Everybody hates that. Let me give you a couple words, explain what AMT is. AMT stands for Alternative Minimum Tax. Only one word of the 3 is correct. Tax. It's not alternative and it's not minimum. And everybody hated that. That's basically, you do a calculation, you figure out that's how much tax you have. And then it says, but not that fast. Wait a second. We have that other calculation, AMT. And if it's higher, then you pay that. That thing was promised to get killed. It did not get killed. It got pushed into higher income levels, but unfortunately, it's still there. Next on that list is mortgage interest. We're talking right now on the business side. What did not change? There was still up to this day, a lot of questions we receive is, okay, so I now hear that mortgage interest and property taxes on my investment properties are limited. No, on personal side, yes. On business, no, they did not change. You're an investor, you have 25 properties, your entire mortgage interest in all of property taxes, still deductible in full. Nothing changed there. Next is, there was a scare that rental income was supposed to be exposed to self-employment tax. It was not before the reform. It still isn't. There was a talk that it would be, so relax on that if you heard the rumors. That didn't change, and generally speaking, landlords are not discriminated against in that tax reform. I was among the people who, during the process, as we had different proposals and we were studying them, I was writing some blog posts and putting comments on Facebook that yes, there was a lot of bad stuff in the proposal that could hurt the landlords. And then came a very good argument. Okay, who is in charge of the tax reform in Congress? Those people have rental properties themselves. They are the landlords. Highly unlikely they would shoot themselves in the foot, and they did. So that thing stayed. Okay. Next, depreciation periods did not change. There was a talk about how they would change, how maybe they would get shorter. No, pretty much everything stayed the same. Next, 1031 exchanges. Was a lot of scare. We will no longer have 1031 exchanges for real estate. We do. 1031 exchanges were eliminated for everything but real estate. They stay with real estate, so that good part is still there. And one more thing is, sole proprietorships was a lot of talk how after the tax reform, everybody will have to form an LLC or a corporation or something like that to get advantages of the tax reform. No. If you're a sole proprietor, meaning that you do not have any formal entity, just operate in your own name, you get the same benefits as people who have entities. So don't worry about that part. Okay. Any quick, immediate question about those things that stay? Okay, I said quick, you were not quick enough if you didn't raise your hand. Next. So now let's talk about what did change. What got killed or changed, and we're talking about personal side. Now, personal side got changed a lot, and before I show details and we talk about specific provisions, I want to give a little bit of background on what that whole thing is about. Because on the personal side, what was the promise of Trump? What was the idea? Anybody remembers?
Postcard.
Okay, yeah. I will make it so simple that everybody can do tax return on a postcard. Ha, ha, ha. Good luck with that. That postcard will have to be like 5 feet by 8 feet per side. Okay, so what did happen is, but there is simplification for some people. For what kind of people? Who have super simple financial life, meaning is what? You have W-2 job and you have a house. Okay. Did it simplify tax filing for this group of people, which is, by the way, huge? You know, more than half of our population. So, yes, it became simple. But why it was complicated before? Anybody can tell me? Because why it was so complicated before?
Earned income tax credits.
Earned income tax credit is a good one, but before we even get to that, why it was complicated? Itemized deductions, correct, because there were so many things that an individual could potentially deduct. It was called itemized deductions. And was whole page, and then that page had multiple attachments, and I'm saying, you could do this, you could do that. Okay, so yeah, that made it complicated, but also offered a lot of opportunities. So how do we simplify that? We throw it out. Yeah. Now it's simple. So are people happy about that or not happy? That depends. If you were one of these people who used all of these things, then you may not be super happy. If you were one who did not use that, then who cares? So to put things in perspective, what I'm going to show now is let's look at the statistics. How many people, what percentage of people use itemized deductions? 45%. Like about 30%, like 1/3. So after the new rule, how many are going to use itemized deduction? Estimation is 10%. So we had 30% now, 1/3 of these people. So 90% are not going to use them. So how did that happen? When you do your personal stuff, you have choice. Always had, still have. You either take what is known as standard deduction. It's like your general coupon saying, here's your $100. Not really 100. Okay, it was 12,000 if you are a married couple. Okay, 12,000, your deduction you are given for what? For nothing. Just give away 12,000. Or you can go that itemized deduction route and start adding them up. So I have these, I have that, that's okay. So if you get more than the standard, so what do? You take the one that goes higher, itemized deductions. So okay, if they are not big enough what you do, you take standard. So you take bigger of the two. So how that reform was done? They killed a lot of stuff on this side, those itemized ones. But what they did instead is they said, we take that and we double it. So the standard that was 12 is now 24. Which means it's much less incentive for people to add stuff on this side. If before, as the minute you are over 12, you win. You get more. Right now, you are over 12, it doesn't matter. You have to be over 24 in order to benefit. Is that part clear? Because it's not clear to a lot of people.
So minimum is you.
Okay.
You have 24,000.
That is dangerous if it's not clear to you. Okay.
24,000 is the minimum
Standard.
standard.
The standard. So
Right.
basically, it's okay. You always, before or after. That's what I understand. Before or after the tax reform. On your personal side, personalized test. Not business. We're not talking business here. We're only talking person. So on the personal side, you can choose as a deduction whichever is bigger of the two. One was standard amount. Everybody gets 12. Remember Oprah, our future president?
Yeah.
Yeah, and it's like everybody gets standard deduction, 12. Okay, now, or if you start adding up those that are called itemized, which is mortgage interest, property taxes, medical, casualty losses, church donations, all of that stuff. If they are bigger than 12, then you get to take them. But you have to list them and itemize. Same thing stays here. Like after the tax reform, we are still in the same position. You can take the standard, or you can take itemized if they are high. But what they did is, on itemized, they put restrictions and removed a lot of stuff. So you cannot go as high as you could before. What they said instead is, okay, but what used to be 12 is now 24, twice as high. So everybody gets to take their 24 now. Which means that who is still getting itemized? Those who had itemized way higher. If you have an itemized deduction over 24, if you had them 30, you still want to take 30. But prior to that, 30 over 12 was huge advantage. These days, 30 over 24 is not that great of an advantage. So some people are saying, yeah, you still get to take that, but not, the difference is not that drastic. Who suffers? Can you guess right now who suffers in that calculation? The one who was in the middle. Who was above 12, but below 24. Because if you had 20 before, would you use 20 before?
Yes.
Yeah, 20 was bigger than 12, you are 8,000 ahead. What happens now is, now 20 is below 24, there is no point to take that. So, you still kind of win. You know, you can still take 24. 24 is better than 20. But some people are unhappy about that because, oh, I used to have an advantage. Well, you still have a bigger deduction right now. You have one I cannot take itemized. You have a bigger one now. So I want to keep this in perspective. Now details. So what actually happens there? Okay. First, I said earlier we still have 7 rates, 7 tax brackets, 7 different rates. What happened is for most of people, pretty much for everybody, there is one very narrow area where it happened that the tax rate got slightly higher, but very like tiny zone. For pretty much everybody else, the rate dropped. Do we celebrate that? Yes, any drop is good. Is it huge? No, couple percent, like couple percentage points. So you have 12 maybe, okay, you have 10 now. You used to have 25, okay, it's 24 now. So is it better? Yeah, sure. You know, I will take 0.5% point too. It's less tax, but not by a fortune. And that talk from Trump before that said, remember we are going to have huge like tax breaks for middle class. Well, 1% drop in the tax rate is not necessarily, in my book, huge drop in my tax rate. But it still drops, so I don't complain. I welcome that. Okay, next is, so itemized deductions. Like I said, it's okay. Itemized deductions became restricted or eliminated, some. Now, I'm not going to spend time on that actually right now, talking about details. You know why? There is a lot of good information out there online that explains details. Besides, like I just talked before, only 10% of people right now will even worry about that. So 10% of people, most people will be taking the bigger deduction, the 24,000 more. If you are single, then it's half of that. Okay, 12. But it's still for a lot of people, like for 90% of people, will be bigger than what they can do with itemized. But on itemized, yes, things became restricted. So what became restricted, I want to just mention a couple things real quick, but I'm not going into details. So what got restricted? Before that, you could take all mortgage interest. You still can take all mortgage interest, but it's a little bit restricted. Depends how high your house is. Before that, you could deduct up to $1 million worth of debt. So right now it's reduced to $750,000. Okay. Do you care? Well, if your house is $1 million house, you think I should care, but you don't. Why? Because the old debt is grandfathered. We are talking about new debt. There is a lot of misunderstanding about that. If you had $1 million house before $1 million mortgage, it's still fully deductible. We are talking about new one. You are buying $1 million house now with $1 million mortgage, and Paul right here is willing to finance that. Yes. So we are only going to be able to deduct 750 out of $1 million. Okay, some people are affected, but not a whole lot. Property taxes. Before that, you had that $1 million house, and that $1 million house had 20,000 annual property tax. You could deduct it. Okay, it's limited to 10 grand now. You cannot go past that. So limitations like that. Does it matter? Yes, for some people it does. Particularly people in the states that have state income tax, which is not us. You know, so that's why people in California and New York are so upset about that, because their property taxes is so huge. And that got squeezed. Okay, sorry, don't live in a blue state. Okay, come here. You know, we don't have state income tax. It's a little easier here. Okay, now next. And by the way, it was only half joke. It's actually legitimate tax advice for people who live in states with, and not a political state. If you live in a state with high state income tax, it's a wise tax move to move to an income tax-free state like Texas. Okay, tell all your relatives. Next. Here it is. Oh, and I'm sorry, before we go there, on itemized, what got eliminated is, there was at the bottom of itemized deductions, there was an area that was called miscellaneous itemized deductions. All of them are gone. That whole section is gone. Who it hurts? It hurts mostly people who had jobs, W-2 jobs. I'm not talking investors. W-2 jobs, and had to pay a lot of expenses out of your pocket. They were called job-related expenses. Example is like, if you were a salesperson and you had to drive a lot on your own car, and your company would not reimburse you for that. In the past, there was a big deduction for that. Not happening anymore. That thing is killed. Okay. Who it affects on the investor side is not a lot of people, but it changes the way private lenders work. We are not going to have time for advanced strategies right now, but if you're a private lender, you may want to rethink the way your business is structured. Okay, so standard deduction, I jumped ahead of myself, that's okay. Standard deduction. So, remember we talked about how standard deduction doubled, right? So, you know, if you increase something, something has to give, right? Does it make sense how the system works? You cannot just like give everything free unless you are Bernie Sanders. He is going to give everybody, you know, everything to everybody for free, and there is no downside to it. There is always downside. You give something for free, like double standard deduction, something has to go. So what went away is, prior to that, everybody had exemption. Exemption means like you got approximately 4,000 per person in the family. So if you have two people in the family, husband and wife, so remember what was before, 12,000 standard deduction, but on top of that, we used to have exemptions, plus 4,000 per person on top of that. So it makes it actually 20. So standard deduction went up from 12 to 24, double, but no exemptions anymore. So it's 24. So did it really double from 12 to 24? Not really. It sounds like it doubled, but it did not. It doubled, but exemptions are removed. It's still 24 is higher than 20 in adult calculation. Unless you think about who? Children. Children in your family used to have exemptions. So what happened before is, yes, you have 12,000 standard deduction, and you have 4 kids. 4 times 4 is 16. 16 plus 12 would be 28. No, we don't have exemptions anymore. So right now with 4 kids, you seemingly lose. Do you catch what I'm talking about? So again, it keeps going like, do you see how we are seesawing that? Yes, it's doing this, doing that, so is it simplification? Yeah, fewer lines on the return for people like that. But does it help people? Depends. So once that calculation came in, everybody said, wait a second, but we have kids, so that's not fair, we are losing. Okay, we are going to compensate you for that. So what happened is there was another part in the tax return that was child tax credit. So in order to compensate for removing exemptions, they doubled child tax credit. And we can talk about these provisions a lot and run a bunch of numbers. The question at the end of the day is, so am I better off or not? So if I have a family of 4, me and my wife work, we have 2 kids. So are we paying more taxes or less taxes? That really is the question which we should discuss instead of talking about, so what exactly these provisions do, how it works. So more or less. The answer is, for most people, less, but not for everybody. All of us tax professionals ran a bunch of calculations, what if scenarios, and it shows some families will lose. Most families will win. So where are you? I don't know. We'll have to run the numbers and we'll tell you. But chances are you will win. Not a whole lot of families will lose under that calculation, but it's possible. So there is still a group of people who will end up simplified but hammered by the new reform. Yes, not a whole lot, but some families will be in that situation.